In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, checking out of Marriott. Shares plunge as the world's largest hotel chain discloses one of the biggest security breaches in corporate history. Personal data from hundreds of millions of hotel guests left at risk. Plus, Presidents Trump and Xi are set to meet for dinner Saturday night at the G20. Will the leaders find a new deal on tariffs palatable? And Sandberg versus Soros, new revelations that Facebook COO told employees to investigate the financial dealings of George Soros after he lambasted the company. Why the social network's defense keeps changing. The details of more than 500 million hotel guests may have been stolen in a years-long hack that could be the biggest breach of its kind in corporate history. Marriott, the largest hotel chain in the world, says passport numbers, emails, mailing addresses, credit card details, and more were all left vulnerable. The hack started years before the company bought Starwood in 2016 and can now impact all original Starwood brands, including the Westin, Ritz-Carlton, W, St. Regis, Sheraton, and more. Marriott has reported the incident to law enforcement as the investigation begins. Joining us to discuss here in San Francisco is co-founder and COO of Shape Security, Sumit Agrawal, who is also a former Department of Defense senior advisor on cyber innovation to the Obama administration. And in New York, our hotels reporter Patrick Clark has been following this story. Patrick, what is the very latest that we know?
Since 2014, there's been unauthorized access of data from the Starwood reservation system, and that includes all the hotel brands you mentioned. Up to 500 million records is what they've said. 327 million people have potentially had loyalty account numbers, passports, and reservation history, right? So potentially, where you have stayed on every night you've been on the road if you are a traveler who is loyal to Starwood hotels.
Now, Sumit, I've been trying to think of a hack that's bigger than this. This seems to be bigger than Target because hotels just have so much information on us. How significant is this? How does this rank?
It's almost unprecedented, Emily. There are a few hacks that have been bigger by volume, but those were generally limited to email address and password on a particular system. That's a big deal, but this depth of data, which really speaks to going from authentication to everything about your use of Starwood, is a little bit bigger than anything we've ever seen before.
So the CEO of Marriott, Arne Sorensen, said, "We fell short of what our guests deserve and what we expect of ourselves. We're doing everything we can to support our guests and using lesson learned to be better moving forward." What went wrong here? Because this has been going on for a very long time and nobody knew about it.
It's a great question. What did go wrong? I think what's happening is that large enterprises are becoming so severely targeted by incredibly sophisticated attackers that everything that we've done before is just starting to fall short. So I don't necessarily think that they are alone in having fallen prey to something like this. The severity, the breadth, the sophistication of these attackers in encrypting the data that they were taking out, it speaks to a level of sophistication that I just don't know how anybody can reasonably get ahead of. Now, the length of the attack, the fact that it dates back to 2014 is definitely surprising.
Now, that said, Patrick, you spoke to cybersecurity expert Brian Krebs, who said, look, there were hotel hacks disclosed at Trump hotels, the Intercontinental, Hyatt back in 2016. The fact that they didn't discover this until now means that nobody was looking.
It could mean that. I mean, it does. They have not yet said why it took them so long. They haven't really said why they were able to discover it now either. Marriott has been integrating the Starwood loyalty and the Starwood reservation system with the existing Marriott reservation system. That process started in August. I asked Marriott specifically, did this come up because you were combining these two systems? They said no, absolutely not. But what was going on for these 4 years that this remained unnoticed? It's not really clear. It's not clear that data was being accessed in sort of a continuous, in a continuous way. So, was this a vulnerability that was created 4 years ago and accessed periodically, and they happened to catch this one? Or, as of now, I don't think Marriott has told us everything we want to know about it.
Exactly, Summit. That's actually the first thing you told me when you sat down today, is there's probably a lot more here. I think for a lot of customers, whenever you hear data was exposed, it's not necessarily your data was stolen and it was used in this way. So, what do you think was actually done with this stolen data, or could have been done with this stolen data?
Well, that's the biggest problem. We've never seen so much detailed information on individuals, including things like passport numbers, exposed before. So think about how difficult it is to even change your passport number. I think this is going to cause a raft of problems for consumers in whose names credit cards will be opened, lines of credit will be accessed. There are lots of ways that criminals can monetize this information, and I think that that is really what the future holds.
Patrick, you made an interesting point in your story where, when credit card information or credit cards are stolen, the companies are obligated to make the customers whole. But is it the same with a loyalty program? And of course, Starwood had, one of the most popular loyalty programs in the world. If hackers could have come in and used their points in the Marriott system, will customers ever be reimbursed for that?
It's another question for Marriott. We're going to find out, I suppose, if this breach does lead to people's loyalty points or loyalty accounts being accessed. I mean, there's tremendous amounts of value in there. I mean, so much. I wish I had looked it up before I came on, but the monetary value of all of the points that are earned and sitting in customer accounts is pretty vast. I don't know that we know how that will play out. First of all, it's possible that this breach could lead to people's having, to people having points kind of stolen, but it's not. I don't know of firsthand, accounts of that actually happening, and I don't know that, I don't know how Marriott would handle it if it did happen. But yes, I mean, it's absolutely another dimension to this.
Summit, you worked in the Obama administration. What do you imagine is going on behind the scenes right now in terms of this investigation?
Well, I think that you've already seen calls for, does there need to be more legislation? How do we need to do notifications and disclosures? So I think that the governments around the world are reeling. I mean, the GDPR regulations in Europe are swinging into action here. How do we incentivize companies to do a much better job of this is a big question that everybody is struggling with.
There's another issue here, which is that, this hotel chain has data on some of, very prominent people, where they traveled and when, and that information could have been taken as well.
Well, so that's what's even more frightening. There's economic motivation to sign up for something new in a customer's name. There's also a national intelligence angle to this. If you know where someone has stayed, if you know where a prominent person has stayed, there's a lot of value to that. It really reminds me a little bit of the Facebook and Cambridge Analytica scandal. You can learn a lot about a person, let alone a prominent person, based on where they have stayed over many, many years. Full reservation and transaction history is a frightening thing to lose control of.
Now, with these big breaches, the question always comes to mind. This is just what we know about. I mean, is this happening everywhere and we just don't know, or it hasn't been disclosed?
It's a little bit of the tip of the iceberg. It is happening everywhere. We know of over a dozen breaches in the last 12 months just in hotel. Our company tracks these things. So we're seeing more than one major breach a month on average. And unfortunately, even those only represent a fraction of what's actually going on behind the scenes. I think the reality is that technology and defensive measures aren't keeping up with the value of these systems. And so attackers are going after that value with incredible sophistication.
Have the breaches that you've discovered been disclosed?
All of the breaches that we've discovered have been disclosed either before or after we discovered them, for sure. Companies are getting much better about disclosing these things more quickly. I think we need to do better than that, though, and move to not being breached in the first place.
All right, well, Starwood at Marriott has set up a dedicated website and call center for customers to deal with questions. I'm sure they're getting a lot of calls right now. Thanks so much, Shape COO and co-founder Summit Agrawal, as well as Patrick Clark for us in New York.
Thanks, Emily.
Coming up, George Soros has been taking out big tech, taking on big tech, and his criticism of Facebook has the company asking, was it financially motivated? That is next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Now to the story we've been following all week, the feud between Facebook and George Soros. Facebook COO Sheryl Sandberg had employees look into the billionaire's holdings of the company. The reasoning, according to Facebook, is that Sandberg wanted to determine whether Soros, who had criticized the social network at the World Economic Forum, had a financial reason to do so. This is the latest revelation calling into question Facebook's leadership and its actions during this time of crisis. Joining me now to discuss, in Washington, we have Sarah Miller, the Deputy Director of the Open Markets Institute. She is also the spokesperson for Freedom from Facebook, an anti-Facebook coalition mentioned in Facebook's response to this latest news. And in studio, Bloomberg Tech Sarah Fryer, who, of course, covers Facebook. So what is the real problem here? Is it that Sheryl Sandberg asked employees to do research on the financial connections or financial interests of George Soros as it pertains to Facebook, or that Facebook's explanation of what happened and who knew what when keeps shifting?
It's the latter. I mean, it makes sense. Anyone who's running a company is going to want to know what motivations their critics have and is going to want to figure out where the money is coming from. This is an instance where Sandberg initially denied knowing anything about the opposition research firm that ultimately linked Soros, I should say, to the Freedom from Facebook protesters. And then a few days later changed her story, and now we hear that she was actually at the beginning of asking her employees to look into Soros. So it just goes to show how they're not keeping their story straight, and they're still trying to deal with this as a perception problem instead of just being transparent about what happened.
Now, here's a statement we got from Facebook. Mr. Soros is a prominent investor, and we looked into his investments and trading activity related to Facebook. That research was already underway when Sheryl sent an email asking if Mr. Soros had shorted Facebook stock. Sheryl never directed research on Freedom from Facebook, but as she said before, takes full responsibility for any activity that happened on her watch. Now, Sarah Miller, of course, you are the spokesperson for Freedom from Facebook. What is your reaction to this statement?
Look, I think what we think is that if you take this up at a higher level, what it shows is that, Facebook simply cannot be trusted, and they've sort of been trafficking on this notion that, look, you can trust us to fix our problems. We're this warm and fuzzy company. We want to bring people together. And I think what this latest revelation shows is that, Facebook will do what it takes to protect their reputation and their profits. And if that includes lying to the public or lying to members of Congress or lying to others to do that, so be it. Facebook is just like any other monopoly, and they're willing to go to great lengths to protect that status.
And you've gone so far as to say that you think the FTC should break Facebook up. I think it's important that we clarify what exactly Freedom from Facebook's relationship to George Soros is. Does he have a financial interest in your organization?
No, he provides no funding to Freedom from Facebook. It's a separate initiative. So that's not correct.
It's an offshoot of the Open Markets Institute, which, as I understand it, Soros did fund.
Yes, we do receive a small amount of funding for a different type of program for the Open Markets Institute, but that is not related to Freedom from Facebook and its actions as a coalition.
So I guess I'm confused. So how can it not be at all related? If there is money coming into the organization that is an umbrella organization, I have heard a lot of confusion from people about how this actually works.
Sure. It's pretty simple. It's a separate initiative. Our organization, the Open Markets Institute, also believes that Facebook should be broken up, but the activities of our coalition are a separate initiative that are not explicitly supported by the Open Society Foundation.
So, I want to talk a little bit more about, the latest revelation that Sheryl Sandberg ordered or asked employees to do research on George Soros. Antonio Garcia Martinez, who's a former Facebook employee, thinks that the New York Times spin on the story, that the headline was misleading. They didn't look into his finances, he tweeted. They looked into whether he shorted Facebook stock after slamming the company. Soros' fortune stems from his famously breaking the Bank of England by shorting the pound and forcing the UK out of the proto-euro. Sarah Fryer, isn't this something that most companies would do? Look into the financial interests of people making negative statements about them?
Yes, and I think that Facebook has been especially concerned about what the motivations of their critics might be because they've had so many high-profile critics in the last couple years. And I, just heard a lot of concern about, why is this former employee speaking out? Do they have something to gain? Are they trying to raise money for their fund? I mean, this is not the only instance where Facebook has tried to figure out if their critics have an axe to grind. That doesn't mean that Facebook isn't worth critiquing, that even if they have, something going on financially, that there isn't still a reason to speak out. It just means that Facebook wants to know what's going on, and I think most companies would.
So, Sarah Miller, there are many different problems and many different reasons why Facebook is being critiqued here. What do you think is the biggest problem? If Facebook is doing what most companies would do to protect themselves, what's the problem with Facebook doing it too?
I think the problem is that it doesn't match with the image that they're wanting to promote, and it also doesn't match with what they're telling members of Congress and others that they'll do, which is fix the problems themselves. They're saying, look, trust us, we can fix this. We know we're breaking democracy. We know we have problems with information on our platform, but don't worry, we'll fix it in good faith. And I think what we've seen with these latest revelations is you cannot take Facebook in good faith. They're out to protect their reputations and their bottom line, and they aren't going to, cooperate necessarily on things that aren't good for those two things.
All right. Well, we will, of course, be following every twist and turn of this as the story continues to unfold. Sarah Miller of the Open Markets Institute and Bloomberg Sarah Fryer, thank you both. Coming up, it's a G20 dinner date. Will Presidents Trump and Xi make headway on their tariff tiff on Saturday night in Buenos Aires? This is Bloomberg. Leaders from the world's top 20 economies are meeting in Buenos Aires through the weekend. Trade and tariffs, of course, on top of the agenda, with two names dominating the conversation.
President Trump.
President Xi.
President Trump and President Xi.
Trump and Xi.
Xi and Trump.
And representatives from both sides.
On Saturday evening.
The Saturday evening dinner.
The expectations running high.
I'm optimistic they'll agree to keep on talking. I'm not sure we'll see much more of that.
We're probably going to get some sort of a ceasefire deal.
Hopefully we get some not bad news.
Because both sides kind of need it.
If we do get some resolution,
any sort of breakthrough,
I think that you're going to see some catalyst for the shares to rebound.
A very low bar for success.
It is very much a wild card watching Donald Trump go into a meeting like this.
President Trump has already imposed tariffs on an additional $250 billion worth of Chinese goods this year. China responded with tariffs of its own. And just this week, the president floated further tariffs, which could impact Apple products, including the iPhone. Bloomberg's Eric Schatzker is on the ground in Buenos Aires covering this meeting. So, Eric, what are the real expectations for any progress between the U.S. and China as a result of this meeting between the two presidents?
Emily, it's difficult to say what the realistic expectations are because we're getting different signals. Trump, on a couple of occasions already today, has needled the Chinese. He talked about currency manipulators in the signing ceremony for the USMCA, the replacement deal for NAFTA, and that was a not-so-veiled reference to China. And Sarah Huckabee Sanders, the White House press secretary, talked about or at least told reporters about Trump in his breakfast meeting with Argentine President Macri, also complaining about the Chinese. At the same time, however, we had a conversation with Robert Lighthizer, the U.S. Trade Representative, in which he said he would be surprised if the dinner between Presidents Trump and President Xi tomorrow night weren't a quote-unquote success. He said they had a great rapport. Each man had a respect and admiration from the other, and that he thought there was reason to be optimistic. He wouldn't go so far, though, Emily, as to say that a deal was a certainty or even a probability. He said that was way above his pay grade. That's why I say it's hard to describe there being a concrete expectation, because we're being led in a couple of different directions, one optimistic and the other maybe not so much.
Well, and as you pointed out, the president himself, what he says continues to shift. Yesterday, he said before he took off, quote, "I think we're very close to doing something with China, but I don't know if I want to do it." Today, he said this.
And we're working very hard. If we could make a deal, that'd be good. I think they want to, and I think we'd like to, and We'll see, but we'll be meeting with President Xi in a little while. But for the most part, tomorrow, I would say, would be our big meeting. But in the meantime, people are working. Our staff is working, and we have a lot of very talented people working. Larry Kudlow's representatives are dealing with them on a constant basis. There's some good signs. We'll see what happens. Thank you.
So he wants to, he doesn't want to, he maybe wants to, he maybe doesn't want to. How far away are the two countries when you look at the deal terms right now in terms of an agreement?
It all depends on what, at the very least, what the White House wants to see in a deal. Let's establish one thing first. Whatever happens on Saturday night, it is not going to be a deal. There's not going to be any text. It's not like the Chinese and the Americans have worked up some kind of a draft agreement that Trump and Xi are going to sign at dinner. What they might agree to is something in principle, and that's the big question. What specifically, if you will, is on the table for discussion? It's possible that there'll be some kind of ceasefire, you've heard that term, to the imposition of tariffs alone. But that would depend on the Chinese at least offering some kind of indication that they're willing to make concessions, not just on trade, Emily, but on a number of other things that are important to the White House, but also massively important to American industry and American technology, which is to say technology transfer, the theft of intellectual property, cyber espionage. We know that those are priorities for the White House and for Trump's entire negotiating team. And that would be a breakthrough. If we get to the end of Saturday night or perhaps sometime on Sunday, and we get a readout from that meeting, or we get some kind of a sign from the Americans or the Chinese that Trump and Xi have come to an agreement or framework, something of that nature in principle around those ideas, that would be enormous. The reality is that that's probably not so likely. And that it may be just more a matter of them getting along well. They haven't seen each other in more than 12 months.
Eric, last question, quick question. Give us some color from the ground. You've got 20 countries meeting. You've got President Trump canceling his meeting with President Putin last minute. You've got these, issues surrounding the Mueller investigation here in the United States. What is the dominant narrative on the ground right now?
There isn't much of a narrative because these kinds of agreements don't tend to produce much in and of themselves. What happens on the sidelines is far more important. The leaders are struggling at this very moment to come up with a joint communique that reflects some kind of a consensus. That, more than anything else, Emily, gives you an idea of what the meeting itself produces. They're much more valuable at times of crisis. This isn't, as bad as the tensions may be over trade, this isn't a crisis at the moment.
All right, Bloomberg's Eric Schatzker on the ground for us in Buenos Aires. Much more to come from you, Eric. Thanks so much for joining us. Coming up, November has been quite the volatile month for tech. We'll break it all down. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. President Trump's much-anticipated meeting with Chinese President Xi Jinping is almost here, but it may not mean a reprieve from big tech volatility. The president has said he's considering slapping tariffs on the iPhone, but Apple's got other problems too. This week, Apple lost its crown as world's most valuable company to Microsoft, and the market caps of both companies have been flip-flopping ever since. Joining us now, Bloomberg Tech's Tom Giles, Bloomberg Opinions, Shira Ovide. So, Shira, what does Apple really have to worry about right now?
So many things. The main problem for Apple right now is that there's just investor anxiety about demand for iPhones. There have been these repeated reports from Apple suppliers or news out of the supply chain in Asia that Apple is maybe cutting production lower than expected on the new iPhones. And look, those supply chain reports are not always accurate. They weren't last year with the iPhone X, but it just feeds this anxiety, as we've already seen, that sales of iPhones and other smartphones are basically tailing off. The growth, the easy growth in that market is gone, and that's reflected in Apple losing its market cap #1 position to Microsoft.
Now, Tom, a lot of optimism about Microsoft's cloud. We should also talk about what Microsoft is doing so well because, you know, if anything, I think we might have thought Amazon would be the one to take this crown.
Well, Amazon, remember, did touch $1 trillion for like a nanosecond and then it retreated back. But they've got a whole host of other things to talk about on the Amazon side. As far as Microsoft, it's mainly about Apple weakness, right, that's resulted in this trade-off. That said, Microsoft is in a bit of a sweet spot right now. It's the consumer-facing companies like Apple that are getting hit right now, that have been the darlings of the tech industry and the market for years. And now the people are wondering about whether the consumer is as strong as had been the case before. Some of these other companies that cater mostly to businesses like Microsoft, which is, you know, failed miserably in the consumer space. This is now the one time that that's actually working to its advantage.
Well, we'll know a lot more after this holiday season when Apple reports for the current quarter and how well iPhone sales, you know, how well the iPhone performs. We won't be getting unit sales, but we will be getting some more.
And is their strategy paying off? And their strategy is we're gonna hope that people go for when they buy a phone. They're not buying them as often, but when they do, we hope they're going to go to the higher end devices. And two, we hope when they buy the devices, they're going to pay for services. Apple wants you to believe that it is a services company, and they've shown signs of progress in that direction. So they are making progress.
So, as you mentioned, there's lots to talk about when it comes to Amazon as well. Shira, this is also a company that touched $1 trillion. Now it's gone way down. What's happening there?
So part of the issue is simply that the rate of revenue growth at Amazon is showing some cracks. And it's too early to know if it's really a trend or if what we're simply seeing is Amazon is shifting sales from the goods that it itself sells to the goods that its merchant partner sells, which are ultimately more profitable for Amazon. So that may be reflected in this revenue, the decline in the revenue growth rate. But look, you have Amazon, a stock that's valued entirely on this preposterous rate of growth, and now there's some questions about how sustainable that growth rate is. So you're seeing that, again, as Tom said, in the decline from that nanosecond of $1 trillion market cap.
Now, it's Facebook that has seen the most dramatic decline. Shares down 35% since July. Every day there's a new Facebook story, new criticisms about how they have handled Russian meddling, fake news, and more. Is the company being truthful? You know, is Facebook going to get itself out of this?
People are worried about these questions about trust, these questions about can they control the spread of disinformation, can they control the spread of bullying and fake news on the site, and at what point, for our listeners, for our viewers, at what point is that going to filter through toward advertiser mistrust, consumers just like getting Facebook off their phones? We talk to a lot of people. We hear that people just don't trust Facebook as much. Can they monetize Instagram? Can they monetize WhatsApp quickly enough? Those are the concerns that investors have. And I think there's also a management issue, right? We hear, you know, there are questions about how aggressively they have fought their critics and tried to discredit their critics. And how truthful are they being about the steps that they've taken right now?
Shira, all of these companies have different issues, but do you think we're entering a new normal for big tech where there's more scrutiny, where the valuations are lower and perhaps for good reason?
Yeah, I think we are, actually. And I think we saw that last year, and it's really intensified this year. It's the strange period of time where these big tech platforms are both so powerful and big that they're being questioned by regulators that could crimp their power going forward. And they're also showing these vulnerabilities in revenue growth or in usage that may also crimp their future potential. So they're in this terrible position where they're so big they're getting attention from regulators and politicians, and so vulnerable that investors are getting anxious about whether they're going to be as profitable and as rich a source of growth in the future.
So let's end on a slightly higher note, which is that Bitcoin is back-ish. Tom, shares have ticked up a bit. They're actually down today. But
are we still talking about Bitcoin?
Well, yes, apparently we are. We are.
You know, it's a vehicle that a lot of people find very, very interesting. People do see some sense of, you know, as a trading vehicle, it draws a lot of interest. I do think that the credibility of, long-term credibility of some of these cryptocurrencies, some of these ICOs has really been called into question.
Shira, is Bitcoin an indicator of anything broader in the tech space, or is this is cryptocurrency really in a category of its own?
I think cryptocurrency is in a category of its own. I now have Bitcoin blindness, where if I see the word or hear people talk about it, I just tune it out. There is a real technology potential there, but because it's become just this investment plaything, Bitcoin right now is just, it's not real. It's just this hype vehicle.
So, Shira, in general, tech in 2019, what are you going to be watching?
I think it's going to be a lot more of the same, which is, can these huge tech companies overcome some of the problems that we've seen in the last couple of years, which include, you know, misinformation in Facebook, you know, these user trust issues in places like YouTube and Facebook as well. I think Amazon is under this kind of legislative spotlight in a way it hasn't been before. And so I think a lot of the questions are really more of the same, along with, again, some of these questions about the sustainability of what looked like rock-solid business models for a long time, and now I'm not so sure.
Lots for all of us to cover. Bloomberg Opinion, Shira Ovide, Bloomberg Tech, Tom Giles. We'll be all over it. Well, SoftBank and its bankers are confident of their ability to gauge demand for that $21 billion IPO of its Japanese telecom business. For the first time ever on the Tokyo Stock Exchange, a stock will debut without a price range. Instead, SoftBank has set a single preliminary figure. Shares will begin trading December 19th. Coming up, games like Fortnite and Red Dead are coming under fire for spurring gaming addiction in billions of players. Can game developers do more to protect the health of their users? Next. Plus, if trade tensions between the U.S. and China escalate, China may place restrictions on U.S. tourism. How travel companies like Ctrip are preparing for impact. This is Bloomberg. Earlier this week, Epic Games announced its popular video game Fortnite now has over 200 million players. That is a 60% increase in player count from June alone. But while it's a success for Epic, not everyone is celebrating the growth. Parents and behavior specialists around the world are expressing growing frustration with the game's addictive and distracting nature, some even describing it like heroin. And with complaints of compulsive play, sleep loss, and neglect for, well, everything else, many desperate parents are seeking rehab as a solution. Video game addiction isn't relegated to Fortnite, though. The World Health Organization designated gaming disorder as a disease for the first time in June. The Entertainment Software Association says there are 2.6 billion players globally, and annual revenue is expected to grow to $180 billion in the next 3 years. Here to discuss all of this, CEO of Common Sense Media, Jim Steyer, and the Executive Director of the International Game Developers Association, Jen McLean. So, Jim, how concerned are you about the rise of Fortnite in particular?
Well, Fortnite is a phenomenon. You said 200 million users, so it's a hugely successful game. But you also raised the issue of addiction. And are video games addictive? Is the Pope Catholic? Absolutely it is. So the whole point is you have this incredibly phenomenal, successful game, but it raises deep concern for parents. It is the biggest pain point for parents today when it comes to media and technology.
Now, Jen, your organization has disputed the World Health Organization's definition of gaming addiction as a disorder, and you say it's discriminatory against gamers. Why?
Well, in part because there actually is no evidence that video games are addictive. If you look at what the American Psychiatric Association has to say, they've noted that, frankly, the evidence to support creating an addiction category for video games just doesn't exist. In fact, there was a study in the American Journal of Psychiatry that showed that players who show characteristics that you would associate with the World Health Organization's definition don't have any difference in their physical health, their mental health, or their emotional health. So the science just isn't there.
Now, Jim, your organization does a lot of studies as
right.
well. What are you
We're
finding?
the leading organization in the country who do the studies, and that's just simply bunk. That's not correct.
So what are you
So here's the deal. Whether we can get into a long scientific discussion, but that would be boring. Anybody who has kids and deals with video games and also deals with other platforms knows that they can be addictive, and you see compulsive behavior across all of our kids. That's why parents are so concerned. That said, we're not anti-Fortnite. Come on, Common Sense Media has over 100 million users who we help find good games. The point is find balance, set clear limits, but let's not kid ourselves. Don't bury your head in the sand. We are in an arms race for attention today when it comes to technology platforms, whether they're video game platforms, whether they're Snapchat and Instagram, where kids also spend a ton of time. So the point is, let's find a good balance. But come on, don't hide behind some study from some association. The bottom line is this is a big public health issue, but there are also good things, and they're here to stay. Fortnite is an incredibly popular game. It's not going to go away. Let's just do it in the right way.
All right, Jen, got to let you respond to that.
Yeah, you know, I think not deferring to the expertise of the American Psychiatric Association is pretty ridiculous, and we can't confuse fun with addictive. At the end of the day, I am a parent. I have a 13-year-old. And look, the thing that parents need to know is that there is no substitute for good and effective parenting. It's on to parents to be engaged, to monitor what their kids are playing, to use the ESRB ratings that make it very easy to decide what content is appropriate for your kid, and best of all, to play games with your kid, because at the end of the day, games are an amazing and fun way for parents and kids to work together and to enjoy and share an experience.
Now, Jim, you know, gaming advocates would say games can be better than watching television. You're potentially learning problem solving, hand-eye coordination. If you're a parent, do you put your kid in front of a TV and let them watch Paw Patrol, or do you let them play games? But how do we make these decisions?
Here's the thing. I agree, and by the way, Jen made good points there. But there's also the reason why we don't let the Video Game Association regulate itself, because we know it would happen, and we would, just like we shouldn't let any industry just regulate itself because everything will be okay. It won't be. So it's all about balance, about moderation, and common sense. And the truth is, our kids are going to, my 14-year-old loves Fortnite. I know Fortnite very well. So do tens of millions of kids out there. The point is have balance, but also we need a lot more responsibility out of the tech industry in general. This is a story about an arms race for attention, and not just the video game industry, but Netflix, YouTube, all the major, that's Instagram, Snapchat, all of there is intentional design to addict you and me, adults, by the way, as well as kids, to their product. So we have to find the right balance. These games aren't going away, these platforms aren't going away, but we need a much healthier societal discussion about this. And by the way, since Bloomberg has a big business audience, we need business leaders to step up and do the right thing.
Well, Reed Hastings, the CEO of Netflix, has said sleep is their biggest competition.
Correct.
And the time between Netflix episodes is now like half a second. One ends, the other begins. You don't get up and go to sleep. You keep watching.
But Emily, that's the point. And by the way, it's very similar. There's a similar thing that goes on with video games. There's this arms race for attention. And games and Netflix and YouTube and other platforms are designed to keep you there. So, that's the business.
Jen, what is the gaming industry doing to combat addiction? You know, are they living up to their responsibilities? Apple started inputting these things like, you know, telling you how much time you've spent on your screen and giving you these do not disturb options. But do you think the gaming, and some people say that's not enough, do you think the gaming industry has stepped up enough?
So I think the gaming industry has actually shown that it does do a good job of self-regulation through the work that the Entertainment Software Rating Board does. We provide very clear content descriptors because we believe parents should be engaged in the media that their kids consume. And we make it easy for parents to know not only things like whether or not there's violence in a game or what kind of violence might be in a game, but whether or not games use in-app purchases. I mean, at the end of the day, we already treat kids as special consumers, which is exactly what we should do. Game developers, game players, we are parents as well. And we want to make sure that we are helping parents and their children build healthy habits in all of their media consumptions. But criticizing games because they are what I believe to be the best and most engaging and most exciting form of media out there isn't reasonable or fair.
Jim, this is a loaded question, but I'm going to ask it anyway. The Chinese government has led this massive crackdown on games and gaming addiction.
That's right.
Do we have something to learn from
You know, I'm not sure we need to crack down in the same way that Chinese and other Asian governments have. By the way, they also have rehab camps in Korea and Japan and other countries for kids who are addicted. So the answer is, this is something that ought to be looked at the highest levels. And we clearly ought to extend some of the smart regulations that we have around television and cable. Like here on Bloomberg, we are regulated by the FCC to the broader streaming platforms, which include the tech industry and the video game industry. The bottom line is we've entered a new era. We need to have this as a societal discussion. We are not going to let the video game industry, with all due respect to Jen and her colleagues, tell us how to raise our kids and how to find the right balance, because their business is making money and getting as many people to buy and play these games as possible. That said, a lot of the suggestions Jen makes are good. But at the end of the day, parents have a big role. Industry has to be held accountable. Other companies other than Apple and Microsoft have to come out and start to build in features that make it incredibly easy for you and me to limit the amount of time our kids are on these games and on these platforms. So this is an ongoing discussion. But the industry is responsible. They are stepping up some. That's why the Apple example with screen time is so important, because they took the lead there. But the game companies need to do that. You know, back 10 years ago, we had to basically pass laws to prevent them from selling ultra-violent and sexually violent video games to minors. So there is a role for regulation and law here. Everybody has a role to play. And at the end of the day, kids are the most important natural asset that we have. And we got to do a good job protecting.
All right, well, we could continue this conversation for hours, but we're going to have to leave it there. Jim Steyer, Common Sense Media CEO, Jen McLean, International Game Developers Association. Jen, thank you so much for stopping by as well, ahead of a big holiday season, which I'm sure big for games as well. Still ahead, both U.S. and China's tourist industries are hoping to escape the shadows of escalating trade tensions. How travel booking company Ctrip is positioning itself in preparation. That's next. This is Bloomberg. As trade tensions between the U.S. and China continue to escalate ahead of President Trump and Xi's dinner in Buenos Aires Saturday, tourism may become China's biggest weapon. Some speculate that in the face of further tariffs, China may restrict the number of tourists visiting the United States, a move that could cost the U.S. millions in annual revenue. Bloomberg's Tom McKenzie spoke with Jane Sun, the CEO of Ctrip, one of the world's biggest travel booking companies. She weighs in on the tourism impact from the Fortune Global Tech Forum in Guangzhou, China. Take a listen.
We are cautious. For business travelers, that accounts for 50% of our business. These people probably are more resilient because no matter what happened, they have to fly all over the world to conduct their business activities. And then we also target at mid to high-end customers. And these customers, compared to the rest of the market, are still more resilient. But their planning might be trimmed down a little bit. So instead of going to the USA or Europe, they might cut down the budget by going to Thailand, Singapore, nearby cities. Or instead of going to Asia, they might stay within China to travel. So we need to plan, be prepared for the worst, but hope for the best. I think there are macro environment issues as well as industry related. I think if you look at the macro environment, probably all the Chinese internet companies, BAT included, all had a similar decline. Secondly, in terms of industry related, for air industry, the commission rate this year was much, much lower. That also contributes a little bit on the weakness. But I think every time when there is a slowdown, Ctrip always grasp it as an opportunity. So we are very well prepared. When everyone else slows down, we will advance more rapidly in this field.
Well, that takes me on to my next question. What are your priorities for 2019?
Our priority, first of all, is to achieve more efficiency for the domestic market because our scale is already very big. Secondly, the efficiency we pick up on domestic then can be utilized to explore a little bit more new markets. So, for example, Hong Kong, Taiwan, Macau, Japan, Korea, all these nearby countries. Everyone, I think, should be watching the G20 results because global peace, the collaboration between two major nations is good for everyone. Not only good for China, US, it's good for Europe, good for UK, good for everyone. So I hope that leaders will have the wisdom to focus on the commonality and resolve the difference.
Do you think when the US talk about their concerns about China's tech ambitions, are they misreading the realities on the ground, or do they have a point to some degree?
I think China, in a sense, is almost like Yao Ming, an analogy of Yao Ming. When Yao Ming is 10 years old, he is already very tall. So the world expects Yao Ming to already behave like an adult, right? But yet he is a teenager. Right? So China now is has the second largest economy, yet it only grew in the past 40 years, right? How we deal with the rest of the world, how we develop a good global strategy, it's something you need to season and learn. And U.S. is a young country, but it has 200 to 300 years old history. UK, is so experienced in this field. So I think give China some time and China also will be very open-minded to the rest of the world. It will learn, it will become better. The worst thing is to shut down, right? The borders, go back to the old days. That's not good for anybody in the world. So I'm very hopeful that Xi will take on the mission to bring the people in the world through international travel, promote global exchange, promote global peace.
Bloomberg's Tom McKenzie with Ctrip CEO Jane Sun there at the Fortune Global Tech Forum in Guangzhou, China. That does it for this edition of Bloomberg Tech. We will see you back here on Monday. This is Bloomberg.